Getting rich quick is very easy if you follow my strategy.
In today's episode, I'm going to share with you my highest accuracy, highest win rate day trading strategy.
Today, I'm going to be sharing with you what I consider to be the best swing trading strategy that I've ever created.
Talking about my strategy.
I got this, my A+ market mechanics strategy, and it made me over $100,000 last month.
That's exactly what trading gurus tell you. When you see those Lambos, those watches, those private jets, it baffles you. You start feeling, I could drive that car, I could wear that watch, I can do what he is doing. If he could do it starting from nothing, then why not me? This is where it begins. And that feeling makes complete sense. The idea of getting rich quick is one of the most tempting ideas in human history. So,
retail traders consistently lose money. The median trader had 4 trading events. Larger losses on the first trade are significantly associated with leaving the market permanently.
just think for a second. If you genuinely had $1 million strategy that consistently printed wealth, would you make videos teaching people how to copy it? Or would you just sit back and make money? It's simple. Make money. More money. Much more. Most of these people are salespersons who learn just enough trading language to sound convincing. And what started as few people selling courses has mutated into multi-billion-dollar global industry, built entirely on your hope of becoming rich quick. Before we begin, what is trading? By definition, trading is buying and selling of financial instruments in order to book profit. Financial instruments like stocks, forex, crypto, bought and sold within a very short period of time. Most people confuse trading with investing. When they hear these two words, they think they mean the same. Investing is simple. You buy a stock or a property or a business and hold it for years or even decades. It is just betting on an asset over time that underlying asset grows in value. Trading is exactly opposite. You are just trying to profit from a short-term price movements. You buy today and sell tomorrow, or you buy at 9 and sell by noon. You are not betting on company's future. You are betting on where the price goes in the next few hours or even minutes. Most trading gurus sell you trading because it sounds exciting. Because nobody clicks on a thumbnail which says buy an index fund and wait for 20 years. We are naturally attracted to the idea of high returns in very short period of time, and that is exactly what they exploit. Going back to the statistics at the start of the video, most traders lose money. But why? Because they are entering one of the most competitive markets on earth. Imagine sitting down at a high stakes poker table. Across from you are multi-billion-dollar hedge funds and institutional banks. They have better technology, faster data feeds, decades of collective experience studying mathematical risk. And you are just a regular person with a laptop, trying to fight against full-time professionals who have millions of dollars. But for these gurus, none of that matters. If you just learn their perfect strategy and read charts, they guarantee profits. And by telling you these things, they drag you into 3 main markets. Stocks, a small piece of ownership in a company. It sounds easy, buy low and sell high. But behind every price movements are hedge funds and institutional banks, moving millions of dollars in seconds. Forex, trading global currencies against each other. The dollar against rupee and euro against pound. Crypto, Bitcoin, Ethereum and thousands of highly speculative coins. People forget the fundamental truth of the market. There is no such thing as perfect strategy. Even the most advanced algorithmic systems and strategies used by Wall Street fail, because market conditions change constantly. When you study a technical analysis chart, you are looking at a graphical representation of the past. Those candlestick patterns show you what happened in the past, but the market always moves forward. Just because a specific chart pattern worked 3 times in the past doesn't mean it will work on the next trade. The live markets are driven by human psychology, economic news and massive institutional orders. To catch a fish, you need a bait. So everyday trading influencers post perfect screenshots of winning trades. But behind the scenes lies an entire underground market of fabricated reality. For $50, anyone can buy a fake package of winning trades to create fake history on social media. Even when a screenshot is technically real, it is deeply deceptive. A guru can easily flaunt a massive winning trades while quietly hiding 10 other losses in the background, or even worse. Many use demo accounts with fake virtual money and edit them to look like real multi-million-dollar accounts. They are not just disguised traders, they are corporate marketers. Once the fake proof fools you, these gurus use different psychological tricks. One of a kind is FOMO, fear of missing out. By telling you a big trade is happening right now, and by creating fake scarcity by claiming only 10 spots are left in their class, or use authority by showing rented luxury cars and flexing wealth. One important observation to make here. There is a massive difference between how trading gurus portray themselves
The guy shows himself with a picture of a fancy car, fancy girl or something.
and how actual wealthy think and operate.
I'm happy in a pair of khakis and a sweater, so I don't need fancy clothes. I don't need fancy food.
To be clear, not every trading educator is a fraud. There are legitimate professionals who teach risk management, market structure, and true financial literacy. The problem begins when genuine education is replaced by predatory promises of overnight wealth and flexing it. Once you enter this ecosystem, you are placed on a carefully engineered financial extraction ladder. It starts with free content to build trust. That transitions into cheap course. When that fails you to make rich, they tell you basics weren't enough, you need to buy advanced module. Then comes yearly Discord server for live alerts. And finally, elite membership tier. When students of this course lose money, these people deploys most brilliant defensive mechanism, the blame shift. The trading gurus are perfectly self-protecting. If a trade wins, it's a proof that strategy is flawless. If a trade loses, it is entirely your fault. They protect themselves by telling you that you didn't follow rules precisely or that you let your emotions control you. Every loss is transformed into psychological reason why you need to buy the next and more expensive tier of the ladder to fix your mindset. This creates a toxic emotional loop that almost every trader falls into. You trade, you get a small win which gives you confidence. You trade again, another small win which gives you overconfidence. You take larger positions and suffer a massive loss and immediately begin revenge trading to recover. That triggers even bigger loss, which makes you desperate enough to buy Guru's next and more expensive course to find out what went wrong. Another portion of their wealth comes from broker payouts. Gurus partner with unregulated brokers located in overseas, especially platforms which trade forex and crypto. Under these affiliate agreements, the guru receives a small cut of your money every time you make a trade. Do you understand why every trading influencer begs you to click the link in their description? The real money isn't only in educating you about the market, it is also in the back-end payouts from the brokers. While the payout rates vary depending on the specific country, let's look at hypothetical illustrative model based on standard industry referral structures to understand how followers transforms into revenue. It begins with seemingly simple mechanism called CPA, cost per acquisition. The broker pays a guru a flat one-time reward just for getting you signed up and deposit money. If a prominent Fin influencer with a modest following of thousands convinces just 20,000 people to click their link and open an account, a tiny $50 nets them a flat $1 million. This money is entirely paid by the broker. But this is just an introductory handshake. The true wealth comes from the fixed brokerage split. Most modern brokers charge a flat, fixed fee per order, typically $1 per trade. It sounds like nothing to a retail trader, but brokers offer a top-tier gurus a revenue sharing split up to 50% of that brokerage fee for life. That means every single time you buy or sell a stock or currency, the guru quietly pockets $0.50. In a conservative real world, out of those 20,000 referred users, say 80% realize trading is too hard and quit. If only 4,000 people become active daily traders, on an average, if a trader executes roughly 4 orders a day, that equals 16,000 total orders every single day from Guru's link alone. At a fixed cut of just $0.50 per order, the Guru makes $8,000 per day. In a standard 20-day trading month, that scales up to $160,000 per month. In a single year, that generates roughly $2 million in pure and passive income. They do not need the market to go up or go down. The broker handles software and you take 100% of the risk. And the guru collects multi-million-dollar salary just for keeping you active in the game. When you look at these numbers, you realize The luxury lifestyle isn't funded by their own flawless trading strategy. It is funded by the transaction fees of their own audience. The most addictive pitch you will hear on social media is deceptively modest, 2 to 3% a day. But a consistent 2.5% returns per day compounds to an annual returns of approx 800,000% per year. If you started with a single $100 bill and successfully generated 2.5% a day within 3 years, you would be roughly 40 times wealthier than Elon. If these strategies worked as advertised, the gurus wouldn't be optimizing their YouTube keywords. Instead, they would be buying sovereign nations. Even Larry Williams, the actual World Cup trading champion, who famously turned $10,000 into $1.1 million in a single calendar year, had to submit a full government audit of every single trade.
The government came in and audited everything at the brokerage firm, my records, because everybody said, oh, he's cheating. No, I wasn't cheating.
To prove it was real. Professionals like Patrick Boyle and Larry Williams often describe trading as a discipline built on research, risk management, and constant study. Because the math of their strategies doesn't work, these people eventually cross the line from deceptive marketing into criminal fraud. And the list goes on, from $1 billion pyramid schemes like iMarketLive and OneCoin to fake crypto platforms like BitConnect. The story is always the same. In traditional scams, the scammer needs you to succeed just enough to keep paying. But in trading, the house always wins. The real money for these gurus isn't in the market. It's in you. In courses, in mentorships, and in Discord subscriptions which they sell you, and also in broker affiliate commissions. So before you give an online guru your hard-earned money or your valuable time, ask simple questions. Can they show audited broker statements? Is their lifestyle funded by trading or by selling courses? Is this information available for free elsewhere or not? If an educator avoids these questions, a real market operator welcomes the request for audited statements, because in finance, claims means nothing without evidence. Warren Buffett, George Soros, Larry Williams, and Patrick Boyle did not learn to master risk from an internet influencer posing in a rented Lambo. They read thousands of books, logged decades of collective experience, lost their own capital, mathematically studied exactly what they failed, and returned to their monitors with better defensive systems. Instead of chasing a mathematical fiction of 2% daily returns, aim for realistic 10 to 12% annual market returns. Instead of staring at charts all day, focus on long-term investing. Because long-term investing always shows an unbreakable power of compounding. The global financial markets will always be here tomorrow. And so will legitimate financial education, most of which is free to anyone willing to do actual work. So protect your capital, protect your limited time, and above all, never confuse a highly skilled marketer to a highly skilled trader.